Hello everyone and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Welcome to the latest Motor Trade Radio podcast with our weekly roundup of the big car retailing headlines impacting franchise and independent dealers.
And as ever, we've got a packed show for you, starting with a few shout-outs.
Yeah, so if you've not managed to catch it this week, then we had an exclusive interview with Steve Young from ICDP, who many of you will know we do interview Steve on a bi-monthly basis. And we caught up with Steve on this special weekday interview, talking about the things happening with Tesla. And from last week's mega price new car cuts and tumbling shares to the challenges and opportunities of running a direct sales operation. We'll add an extract to this, won't we, Curtis, part way through the show, but we would urge you. I mean, it's a very good, 30, 40 minutes of your time to listen to Steve and his view on what's happening within the world of Tesla, why things have happened, and his view of where some of that might go going forward.
Yeah, it really was a good interview. Steve had a lot to say, and it was so topical because it followed hot on the heels, as you say, of those price cuts of up to 20%, global price cuts. So it was just interesting to hear his take and how that could shape Tesla from here onwards.
Definitely. And the other one, I mean, we did mention it last week and we did play a snippet of it last week, but the interview with Robert Forrester is still available on the chat we had with Robert, Virtue Boss, earlier on this year. And, with talking through, the Helston Garages acquisition and some of the complications with that, and how it's sort of complemented in Virtue's history, etc. But if you haven't listened to it, then again, we would urge you to go and have a listen to that full interview with Robert. And it did prompt a lot of fantastic chat in the social media space, and it's because he did reference Dash Gupta, didn't he, on the interview, indeed. And we managed to get Dash involved with a bit of I think it was on Twitter last Saturday. So it was a good little laugh, that one, about pruning your garden roses and all sorts of weird and wonderful things.
It was a funny line, wasn't it? Because Robert said it was the biggest acquisition of the year and was only possible because Dash was out of the market.
No, it was great. So do it again if you've not seen that and you didn't manage to catch some of that conversation with Robert and others. And I think Peter, was it John Smythe that I think came into some of the conversation, and Dash. It was fantastic. So if you do, let's say, jump over there. The other one this week is we must give a shout out to the AM Awards. A reminder that the entries are now open for this year's AM Awards. Deadline is the 24th of February, so not long off. And also, Motor Trader have also just launched the entries are open for the Independent Dealer Awards with a deadline of the 28th of April. And I know you have supported both of these over time, haven't you, Curtis, in terms of anybody wants some support on building their entries to any of these awards? And I think that is still an open offer from you.
It is indeed, yeah. If you need a hand with pulling entries together, then just get in touch. You can find me on LinkedIn or Twitter. Just direct message me, and let's have a chat. And also, not forgetting our newsletter. As always, we'll be sharing all of today's headlines, the URLs for the headlines on Monday morning in our LinkedIn newsletter. So you can subscribe to that at the Motor Trade Podcast LinkedIn group.
Motor Trade Radio Podcast, powered by eBay Motors Group.
Headlines this week are from AM Online, Car Dealer, Auto Retail Agenda, and Automotive News Europe. So starting with further significant reductions in used EV prices to come, says CAP HPI. Stellantis drops 100-year-old dealer brand in shock rebrand. And staying with Stellantis, why Citroen's global boss says the days of the SUV are numbered. And talking of SUVs, BYD will start selling electric SUVs in the UK this quarter, so that's imminent, we look at Marshall's first acquisition of the year, and we name the new managing director for Norton Way. So lots to chat about in this pod, Phil.
Yeah, definitely, definitely. So we'll head over to AM Online first, and this is the AM is talking about further significant reductions in used EV prices to come, and that comes from Cap HPI. Now, this is coming from a conversation with Dylan Setterfield, who is the director of valuations at Cap HPI, and he really looks at the long-term forecast side of the valuation. So he's looking at where the market is heading, but he is obviously warning that there's further reductions on the horizon there, Curtis.
Yeah, and this particular story followed hot on the heels with a conversation that AM had with Darren Martin the previous day on the back of those Tesla price cuts that we mentioned, and how the ramifications for the EV sectors. So while Cap HBI suggested that the used market has enjoyed a better than expected start to 2023, it does highlight in this piece that EVs are declining at a rate of 2% at that 1 year, 10,000 mile mark. And that compares to 0.9% for petrol and 0.5% for diesel and hybrid. So we're starting to see that gap increase. And it's interesting that in both pieces, it talks about the consumer pushback because of the cost of living crisis, rising electricity costs, at a time when supply of EVs has actually increased, but there's not much evidence. I think this is something that Darren said in his piece. There's not much evidence yet of dealers cutting prices, and it's understandable, isn't it? Because that they would have bought high, so they'll be reluctant to reduce just yet.
Yeah, yeah, and I think I think that I suppose really the relevant bit, and again, referring back to the interview with Steve Young around the impact and some of the strategies of why Tesla have reduced the prices, and he did make a point that it doesn't necessarily mean that you'll get any more further discounts or anything like this on it, that it might be just that list price that's reduced, and the deals going into the retail and leasing sector won't actually benefit from that discount at the high end. But again, I think we're starting to see this point of, as you say, a cumulative of effects on the marketplace. There are a lot of entries now. There's a lot of models to choose from. There's more coming. There's more on the rise, and we're going to be talking about BYD later on in the show. And it starts to put that pressure in the marketplace. And, we are starting to feel a bit of pain alongside the challenges of both the cost of living and the pressure on energy prices, along with interest rate rises as well that we've seen.
Yeah, and it is something that Darren has flagged up, and we talk to him at the end of every month about the previous month's trends, and he has pointed out consistently over the last 2 or 3 months that EV values have been coming down, and Tesla in particular, but not solely Tesla. And there's some eye-watering numbers in this story, because what CAP have done is they've tracked some Tesla values since the middle of September, and from this week, there's been a fall of 25%, which equates to £11,600 loss in value for the Tesla Model 3 long range with 20,000 miles on the clock. So that's a 1-year-old, but a quarter of its value and nearly £12,000.
Yeah, and again, we probably just, as we sort of talked to Steve about, it's a case of finding the place now, isn't it? Finding their
Yeah.
position in the market and where the demand is. And, we know there's challenges in the infrastructure. We know what's going on in the new vehicle market, but actually they've got to find their place in the used vehicle market for this to work out. So I think we're not going to hear the end of this one for some time yet, are we? And, they're talking about last week, a net zero review delivered on behalf of BEIS, which is the Department for Business, Energy and Industry Strategies, recommended the swift delivery of an electric vehicle mandate and VAT cuts to make public charging more affordable. And I think that's part of it as well. That impact on the public charging with the increasing cost of energy is really starting to sort of make the ownership and running of an electric vehicle less attractive at the minute, with, whether you're paying 55 pence per kilowatt or up to 60 odd pence per kilowatt, depending where you're paying it, can be a hefty cost for an electric vehicle compared to its equivalent combustion engine, which everyone's been used to. So a lot more to come on this one.
And heading over to Car Dealer for the next story, the headline there is Robbins and Day name retired after 100 years in shock, Stellantis rebranding move. And I'm not sure if this was a shock, really, but it's.
Yeah.
I suppose the shock is losing such an established name, because we all know Robbins and Day, and
Synonymous within the industry for so long, isn't it? You just
Yeah.
had that strong association with, particularly with Peugeot,
Yeah.
the blue showroom, Robbins and Day, and Peugeot badge kind of went interlinked with each other through time.
Yeah, definitely. And this, of course, is all part of a European-wide alignment in terms of Stellantis' retail divisions across other European markets. So they're all going to come under this Stellantis and new sales and services branding, which the website has actually been rebranded already. So Robbins and Day has disappeared as an online name, and will pretty soon disappear as a sort of forecourt name. But within the story, I mean, there's some lovely background on Robbins and Day. So it was actually started by Mr. Robbins and Mr. Day back in 1913, when two bicycle business actually came together, but it didn't actually start selling cars until 1960, when the business represented Hillman, Talbot, and Peugeot models. So you can see where that connection is developing. So Robinson Day was bought by the Peugeot Motor Company in 1970, and Go Vauxhall joined the branding in 2018. So it has grown significantly over the years, and it represents 66 sites, all of which will be rebranded now.
Yeah, and they're saying that it's a proud day, unveiling our plans for 2023 and beyond to all their management teams, and under their new group name of Stellantis and You Sales and Services. So what do you think of that one, Curtis?
Well,
A long one.
it is a long one. Yeah, it's not as catchy as Robinson Day, and it's always sad to see these familiar names disappear. And it is a bit of an ongoing trend, unfortunately. Especially with the consolidation that we're seeing in the market, and as bigger groups take over smaller groups, and some of those local brands and some of those bigger brandings actually start to disappear. We saw that with the Virtue acquisition.
Yeah.
So Helston Garages, the brands that operated under regionally, will disappear as they're rebranded as Bristol Street and Virtue. So it's part of an ongoing process, isn't it? But
It is.
sad all the same.
But I suppose, as we said, you've Robbins and Day, Summers with Peugeot, then subsequently with Citroen. But actually, there's 14 brands that sit under Stellantis. So, it allows them then to do other things, doesn't it? Without it, that Robbins and Day can't necessarily start to build into the other brands necessarily.
No.
So you can understand it, but it's always sad to obviously lose such a synonymous name in the industry and then get used to a new one. But as you say, it's coming and it's happening. So I expect more of them, I suspect, going forward in terms of that new branding. And staying with Car Dealer now. This is an interesting one. That this is talking from Citroen boss that SUV days are numbered. I think on a day like I've got this week, Curtis, with snow outside and a 5 Series BMW with an X Drive, I'd have an SUV.
You're wishing
SUV.
you went down the SUV
Yeah, I
route,
do,
aren't you?
yes. But it is an interesting story, particularly when you start to think about that sort of 2030, 2035 deadline around EV and where SUVs sit within that electric vehicle sector, isn't it?
Yeah, I was fascinated by this story. I'm assuming that it has come out of a car launch of the EC4, which is Citroen's new saloon, with SUV-like styling cues, but it's not an SUV. And within the story that James Batchelor wrote, he quotes Vincent Kobe, who's the global boss of Citroen, who, when asked, he sort of hints that days are numbered for SUVs. And he goes on to say that the more you will be concerned about fuel efficiency, about electric transition, the more we can come back to more aerodynamic silhouettes. So this is really pointing out that SUVs do not meet that criteria, and it is questionable as to the sort of level of investment post 2035, as you said, when new EVs become the norm in across European markets. But what struck me about this story was that this is the boss of Citroen saying it, but how do his colleagues across the Stellantis? I mean, you mentioned 14 brands. What do they make of his comments?
Yes.
Because
Yeah.
there's a lot of SUVs currently represented by all the other Stellantis brands.
And I think with this one, I suppose it'd be great when we get Darren Martin up from Cap HPI, who looks at this sort of sector of the market, and we talk about SUVs, but the SUV, as you and I have spoken about many times over the years, Curtis, on the podcast, that the SUV market really did go big, didn't it? I mean, you're talking your true utility SUV to your large, your medium, and your small SUVs. Then you've got these crossover
Yeah.
vehicles that sit within that SUV sector. And you can see in a certain ways, depending on where he's referencing that SUV marketplace, that is it just a case that the cars of the future will look like today's crossovers, small SUVs, but you're not actually classified as an SUV. It's going to get quite interesting. So it'll be good to get a view from someone like Darren at Cap HPI on that marketplace in terms of that whole SUV market and how that sits within that EV market. But yeah, it's a good point that's from one of the 14 brands within Stellantis, and they've got a very broad representation of various models, haven't they, right across the Stellantis model. So yeah, and 2035 still a long time off into it at the minute.
It is, yeah, and you can kind of sense that the reactions of them once this story was circulated internally.
You're listening to all the chatter that matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
Now, next up, we've got an extract from the interview we did with Steve Young from ICDP. He's our industry guru. We speak to Steve on a regular basis, and we thought this would be a great opportunity to talk to him specifically about Tesla, because it followed hot on the heels of Tesla announcing its global price cut of up to 20%. So here's a few words from Steve.
So let's start with the global sort of price cuts, which Tesla announced last week, and sees the Model 3 falling around 16%, the Model Y performance by about 12% in the UK, with discounts which in the US of up to 20%. I mean, what are your view on why Tesla's felt this was necessary, and what impacts will it have on the in the UK, do you think?
Well, I think it's a combination of reasons, as there usually is with anything. Nothing's ever that simple. They clearly face a lot more competition than they did, even just 2 years ago. Let's say, when Model Y sort of came along, or a couple of years before that, Model 3. So there's a lot more competition. As I said in the blog, you look at Mercedes, they've got 7 different EQ models, distinct models in the lineup, and it's not only them. It's Audi, it's BMW, it's Hyundai, it's so on. It's a very, very different landscape to what it was 5 years ago, or when they launched Model S a decade ago, and that has to make a difference. I think there's also a little bit of mischief, probably. Tesla claim that they're getting continual productivity improvements and getting costs down out of the batteries and the other materials that go into the car. And so, whilst they're cutting the prices, they probably aren't cutting the margins to the same extent. So it's something that they can do, which possibly their competitors are not in a position to do financially. And then obviously they're volume driven, and Musk has said on many occasions it's about volume, it's about growth, it's about changing the world. It's not about profit in the first instance. And they have opened 3 factories in the last year, a little bit more than a year. Berlin for Europe, Austin in Texas, Shanghai in China. They've expanded the original plant in Fremont in California. So they have a number of extra mouths to feed. And when you take all of that into consideration, then I think there just came the point where they said, okay, this is it. We've got a target for this year. We're possibly not going to meet it as if we leave things as they are. So they cut back the prices and stimulated the demand, which is exactly what every other manufacturer does, just not quite attracting the same headlines.
I was going to say, it's not new to OEMs and manufacturers, is it, to do price changes in one form or another, and we might touch on that later in terms of the way they've done it. But I mean, they've had a loyal customer base over the years, haven't they? And do you think this will alienate customers to the Tesla brand, or do you think that will maintain? I mean, you touched earlier. There's a lot of alternative offerings now entering the sector, isn't there? So they are up against some stronger competition than would have seen in previous years.
I think that most people are leasing the product, and so the pain is not so much on individuals, but on the leasing companies who've taken the car onto the books at value X, and now it's X minus 16%. But as we also again know from traditional manufacturers, that if you discount at the front end, then you also knock the residual at the back end, and the actual holding cost, the depreciation over the 3 years or whatever, will not move by 16% or whatever. So the holding costs probably will be something similar. And if you were going along to lease a car now at the reduced list price, that there behind that there will also be an assumption about a lower residual. If the holding cost is the same, forget the influence of interest rates, then probably the lease rates aren't going to change very much. So there's a lot of noise, a lot of negative posts on Twitter or other social media sites. The reality, I think, that people will just look at the car, and net probably more people will be attracted to look at it than by the headline of lower prices than will be put off buying them. Be my view.
He's always good value, isn't he, Philip? He really is.
Yeah, we nearly ran into a whole agency discussion towards the end of that interview, which you need to say if you listen to the full interview with Steve. But again, very, very interesting view on that. And the when you start thinking about the value of Tesla, although the shares dropping by 2/3, still making it's a very very rich business, and one which many operators are nowhere near. But actually, the volume, falling short of the 1.4 million, but still delivering 1.37 million vehicles. It's
Yeah.
still it's a volume of cars, that, isn't it?
It is, yeah, and Tesla's been with us for over 10 years now, but it's still acting like a disruptor, and it is pulling off things like this, cutting its global prices by up to 20%. But there is a bizarre logic behind it, although I'm sure if amongst the buyers who bought Teslas certainly in December, because I think the Model Y was the top selling car across Europe, they're not going to be too pleased, are they? Because they've paid top dollar for their brand new cars. They've taken delivery, and if they're beyond the sort of 14-day return period, they're kind of stuck with an
Yeah,
asset that's depreciated considerably on their drive. But
yeah.
good news for new buyers, of course.
And don't forget, just in terms of the other OEMs that probably saw this news come out when it broke about the readjustment of the price, that will send shockwaves right across other
Yeah,
OEMs that are
yeah,
operating the same peer group as Tesla, or because suddenly their pricing strategy against Tesla will change
yes.
in terms of marketing campaigns and internal campaigns and volume, etc. So, it would have been a bit of a shock to the sector with that kind of level of readjustment of prices so swiftly that, and I think in the interview you mentioned it with Steve, that normally this thing's done, but it tends to be done through other ways, other incentives, other initiatives, through deposit contributions and allowances and subvented finance, etc., and never really just overnight a realignment of the on the road prices at that kind of level. So you can imagine the shockwaves that sent across the sector.
Yeah, and we'll staying with EVs, heading over to Automotive News Europe, and the headline there is BYD will start selling electric SUVs in the UK this quarter. Now, this is a really interesting
Mm.
story because it's not often that within Automotive News Europe they have a UK specific story, because they're obviously looking at the bigger picture across European continental markets. But this is specifically about the UK, and it does say that BYD is actually coming here possibly sooner than some of us thought. We knew it was coming this year, but they're talking about this quarter. The piece reports that the representation will be from a number of dealer partners, including Pendragon, Arnold Clark, Lookers, and LSH, which I think is the first time we've seen all those dealer groups mentioned in terms of
Yes.
representation, isn't it?
Yeah, and it is an interesting one because it says that the automaker is backed by Warren Buffett's Berkshire Hathaway, and they're being appointed the 4 UK dealer partners, and as you say, with Pendragon, Arnold Clark, Lookers, and LSH. Now, we've not heard much around the Arnold Clark, Lookers, and LSH. I mean, there has been stories that we've read out on the podcast around Pendragon in talks with BYD, but I don't recollect anything being confirmed that anything had progressed past the talks, because obviously the whole Pendragon then went into the heading and Lithia and other things that sort of grabbed the headlines around Pendragon, but nothing's really been confirmed about BYD going to Pendragon as a UK distribution partner for them. So again, this is just actually demonstrating one, those, the Chinese EV disruptors entering the UK market, and at what speed they're doing it as well. Suddenly, we've been talking about the Great Wall, haven't we, recently, and the Funky Cat as well, and suddenly, you've got 4 big UK dealer groups there being the UK distributor partner for BYD, which is one, if not the biggest manufacturer over in China.
Yeah, I mean, the scale of BYD is phenomenal.
Mm.
They're already represented in Norway, Denmark, Sweden, the Netherlands, and Belgium. But outside of China, they have a massive presence in some of the other Asian markets, particularly Thailand. They're in Australia as well. And also, there's some interesting stats in this particular story, because it says that last year. If you take BYD's total global sales, so including its plug-in hybrids as well as its pure EVs, it actually outsold Tesla in 2022. And the scale of the growth is seen by its pure EVs, which almost tripled from 320,000 units in 2021 to over 900,000 units in 2022. So BYD is coming, and it's coming here to the UK pretty soon.
Yeah, exactly. So we watched that. I think I might have mentioned it in one of my forecast trends last week, Curtis, about these Chinese entrants and the speed in which they're going to come. So yeah, we keep your eye on the BYD brand, and interestingly, SUV, the Atto 3 SUV as an electric vehicle. So yeah, we'll watch that one very closely. So heading back over to AM Online, and we mentioned right at the start of the show with the shout out there with Virtue, Robert Forrester mentioning that the biggest deal last year, because Dash Gupta was out of operation, who obviously used to run the Marshall operation, but actually this week Marshall has acquired a Jaguar Land Rover dealership off Leicester from Sturgis Motor Group there from down in Leicester. So this is an interesting move as well.
It is, yeah, and it sort of marks a reshuffling of some of the Marshall portfolio, because the piece actually reports that it follows recent disposals of Kia Scunthorpe to Drayton Motors, Kia Ipswich to Donald's Group, and Volvo Leeds to Riverside Motors Group. But this is, as you say, an acquisition from Sturgis Motor Group, and the business itself has actually been within Sturgis for 75 years, and it is in Sturgis's hometown of Leicester. So it's quite a significant move here, and obviously it expands Marshall's representation with Jaguar Land Rover, brings it up to 10 dealerships. So it now represents the brand across Bedford, Cambridge, Cheltenham, Gloucester, Ipswich, Leicester, Lincoln, Melton Mowbray, Newbury, Oxford, and Peterborough. So that really does build on its representation there.
Yeah, and I think it is. We know Chris Sturgis many times. I've met with Chris many times over the years. Great operator, great business. 75 years now. They're still representing six franchises with partners in a Bath. Alfa Romeo, Fiat, Hyundai, and Suzuki. But Sturgis, when I was back in the Jaguar days, that Sturgis were a big operator within that Jaguar brand, and a very well respected operator within that Jaguar Land Rover business as well. So yeah, it's a shame that they've exited that brand, but I'm glad that they've not exited the sector entirely. So they're still representing the sector, and Chris remains there. So good luck to those guys with that venture.
Yeah, and final story this week is from Auto Retail Agenda, and it's an update on a story we touched on 2 episodes ago, our first show of the year, and the headline is Jason Cranswick named Norton Way MD. So this is Jason Cranswick, who listeners will remember from his days at Jardine and more recently at Cinch. And as well as being named managing director of Norton Way Motors, he's actually continuing in his position as chief operating officer at the parent company, Marambeni Auto Investment.
Yes, yeah. I mean, it's an interesting move, this one, and you can start to see with the because you've got RRG, you've got the Norton Way that kind of not necessarily ran independently, but they were independently represented in terms of underneath that Marabeni business. Then you've now had recently just spoke about with the acquisition of HPL coming into that business. So you can sort of see where this is now starting to move in terms of that one synonymous business with RRG, HPL, and Norton Way, centralized functions and systems and things like that. And I think that will be, just guessing, but I think that will be Jason Cranswick's strategy with that. So it will be an interesting move. So he maintains, as you say, Curtis, with the position as COO under Marabeni, but also then obtains the MD of Norton Way role as well, with that stepping down of David Granger, who was the MD there at Norton Way.
Yeah, I think you're absolutely right. This is all about integrating the business. And as we reported two weeks ago, Marambeni have actually acquired the HPL Motors Group, which is that 3-site used car supermarket business. And this does actually bring the business closer together. And a shout out to David Granger. I had the pleasure of meeting David a number of times, mostly actually on stage at the Motor Trader Awards, because he was a serial winner of the Dealer Principal of the Year Award. And he ran Norton Way since the 1980s. It was actually his business. He sold the business in 2008 to Marambeni, but stayed on as managing director. So in this piece, it says that David's actually retired. So yeah, we do wish him a happy, relaxed, and long retirement.
Maybe he's going gardening as well, like some of the others. But,
Yes.
Yes. If you're listening to the podcast today, David, then door is always open for you to come on and have a chat if you so desire. But I think that's it for this week, isn't it, Curtis? Some interesting and very mixed headlines, and I think this week has been a plethora of interesting big headlines hitting the news, aren't there? So a lot's happening still this week.
Yeah, and it sort of follows on from what we were saying last week, that January has very much hit the ground running. There is a lot happening in the sector at the moment, and we do our best every week to just capture the big headlines and give you a flavour for what's going on. But that's all from us. So you've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. So it's goodbye from me.
And it's goodbye from him.
You've been listening to Motor Trade Radio Podcast, sponsored by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.